Yeah, wonderful. Good afternoon and good evening here from Thailand to my English listeners. Now, as you remember, I'm a German guy and I try to speak English. Today is about a very interesting company that I really like so much. It's, in my opinion, one of the best calculable and good companies with a very high quality, and the stock is called Cognizant. And I also bought it in my portfolio, and I told you to every stock that is in my portfolio I will make a video to show you. Cognizant is here. Where is the mouse? And the other stocks on top, there are videos already. And Cognizant, I bought on the year end. So since 1st January, I bought some stocks, and all my portfolio is, I started with 100,000 euro. Now it's 107.3. So my performance is very easy. It's 7.3% at the moment in 24 days. So I'm very happy with that. But to speak the truth, it was very easy because all the stocks had been moving, or the most of the stocks. So the market was not really difficult. So we come to the numbers, or better to say to that graph that tells everything what you need to know about Cognizant, or the most important things. There will be some additives in the end. But the most information we get here on this picture, we have in the red bulks. We have the revenue, and the revenue is absolutely perfect driven from the beginning, is from the year 2000 when the company started get public. And yeah, you can see nearly every year they can increase the revenues. And I can tell you now already, the margins are also very stable. They are around between 17 and 18%. At the moment, they are at 19.3. And especially in the financial crisis, the revenue still went up. So that's a very great business. And by the way, what is Cognizant doing? Cognizant is a IT advising company. They help companies, I say it in very easy words, to come from the analog business to the digital business. They make studies about the markets and this and that. And yeah, so I'm not very deep in this business, but the competitors are big societies like Capgemini or Accenture, and the biggest customers in Germany is the German Telekom and the Allianz Insurance. So, and they are not strong at the German market at the moment. Um, so this is what they do, and also about the cloud business, and cloud business companies are still growing with 35% per year at the moment. So this means there will be a lot of growth ahead in the future, because if the business growth slows down to, I think, 5, 6, 7, 8, 10, or 15%, it will take, I think, many years more until the growth rates come down to this level, to 10 or under 10. So there is a big growth ahead of the next years, for the next years. So this makes also this stock so very interesting. And also the graph, it's the blue line, it's the price of the stock. And it's also, you can see it's not like the revenues because it's more volatile, but it's also growing up very straight, very linear. So this stock is really something that is running with revenues, because revenues are stable, growing year per year. And I'm expecting that this will go on. Now we had a huge drop in the price. Same all the IT, the technology stocks, they all had a depression, and this stock came down from 1991 to actual 57, 58. Now is 62 US dollar the price. And we see in the green line, we see the price earnings that is quite cheap at the moment, around the level of 12 for a growth. In that case, it's really cheap. And we also see the valuation. Before it was much more higher. We had levels from 20, and the average, if we look here, the average of the price earning is around 25. Since in the last 10 years, maybe it's around 20, but now we have a level of 12. The lowest price earning level was just 9, so we are near of the low. And this means why I think that we have a very good chance to come up from this level now, from 60, 62 to the old high for sure. So this is a is a potential around 50% on the short term. I expect this to be in the next 1 or 2 years. And for sure, there will be new highs in the stock because, in my opinion, the company will not stop growing. And if the market sees this and the company is going on to grow, then the price earning levels, the multiples will get higher again, I think, maybe to 15 or 20. So there is enough space for the share to grow. And this moment, I think it's a very, very good time to pick it up. So that's why I did. And but I don't want to give you any recommendation to buy or sell any stocks. I just tell you what I do with my money, why I invest in Cognizant, and why my expectations on the stock is still high for the next years. So I have another graphic that is very impressive. And this graphic shows us the, the the debt of the company. That's really also very, very interesting because we just have a debt from 1.6 billion at the moment, and it was always low. We can see this in the past years, and the total equity is around 12 billion. So this is an equity ratio from 13.8%, which is very, very low. And it's not only this. If you look at the cash is now 1.79 billion. So at the moment, we have more cash in the company than the total debt is from the company. So we can say that Cognizant is in the end a debt-free company. That is very interesting in moments when the interest rates are rising. And so we have to look especially to the debt of the companies if there will be a problem about the interest rates that are to pay in the future. So here we have absolutely no problem. And the last thing that I want to show you is that the analyst expectations are still ahead. They expect for 2022 a profit around $4.44. The next or this year, 2023, 4.68, and to 2024 they are expecting a profit more than $5 at the moment. So and another thing that is interesting, and I think it's very positive, the company is buying back shares, own shares. So if we look in the year 2016, there had been out 607 million shares. Now in 2021 is shares only 527 million. So the buyback is 15% of the outstanding shares in the last 5 years. That's around 15%. That's also very, very good number because this means that if there are less shares, the profit of the company will higher the profit per share because there are less shares than before. So this also means that the profit per share will be accelerated, not only by the revenue and the profit growth in the future, also from the share buyback program. And yeah, that's it. That's it in the end. These are my reasons why I bought Cognizant. I think the point now from the timing is really low to pick it up on a very low price earning around 12. And I think that the company will go on growing in revenues, in profit. So it's just a good pick now from the timing. Come and stay for a while, maybe some years, depends how fast the stock is rising. When there will be an overvaluation, for sure, I will sell it. But at the moment, I think I will keep this stock the next 1, 2, 3 years, and let's see how high will be the profit in the future. Okay, thank you very much. I hope you enjoyed this video, and yeah, have a good day. And yeah, the next time there will be the next video with the next stock. And I hope you enjoy also. Please, if you like this channel, subscribe. Yeah, I'm really happy when you subscribe, and give me a like with the thumb. That would be great. Okay, have a great day. Bye bye.